Okay, so there's nothing more frustrating than going to get a mortgage, submitting the lender your bank statements, and having them, question everything and have you jump through all these hoops. And the truth is, it's probably one of the most frustrating things for many clients when they go to get a mortgage. And after, lending for 20 years and doing thousands of loans, it's definitely something that if you know a little bit up front, it can make your life a lot easier and it can prevent you from making some mistakes that will actually keep you from getting a loan. So hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. Hope you're doing awesome. If you like the video, hit the like button. If you think anyone you might know that might be getting a mortgage soon or buying a house, this is a great video for them as they prepare to go through the underwriting process. So on all mortgages, the cash to close is going to be sourced. So lenders are going to look at the bank statements and try to figure out where is the money coming from. And there are allowable sources and there are non-allowable sources. So obviously allowable sources are going to be things like, if you get money from payroll, money you've already got saved that's in your bank account. So those are simple. Where it gets a little trickier and they can create issues is one, transfers. A lot of people have different accounts. They might be transferring money back and forth. And so if you're going to qualify for a mortgage, lenders typically go back 2 months. So plan on showing about 60 days worth of your transactions for whatever accounts that you're showing. And if you transfer money out of one account into the account that you're showing, even if it's maybe say $5,000, they are going to require you to provide 60 days transactions of that account as well. So if you have a lot of transfers back and forth between accounts, like I recently had a buyer that had 7 different bank accounts. By the end, we ended up having to show almost all the bank statements for those 7 accounts because he was transferring money back and forth between those accounts. So that's one way, just knowing up front if you can have that money in the account that you're going to use, knowing they're going to go back 60 days, the less transfers is just going to make your life easier. Chances are it's going to be fine, meaning it's not a big deal to show those accounts typically, but it does, can create more work and frustration on the buyer side. Also, there's money laundering laws, so at certain deposit points, the underwriters have to question where that money is coming from. So what are the big ones that are going to create a big issue or actually stop you from being able to buy a home? Cash. Cash is the biggest one that I get asked about all the time. And so I wanted to spend a minute talking about it in the video. If you have just regular cash saved up, meaning you've got money, what they call mattress money or in a safe somewhere, just cash that you've set aside, it's going to be problematic to use it in a transaction. I have done waiters before that are getting consistent cash transactions. There are some exceptions, but in general, it is very difficult. And what's going to happen is you're just not going to allow it. So what happens when the underwriter's reviewing a bank statement and say there's $30,000 in the bank statement, even though there's $30,000 in that statement, if say you deposited $10,000 cash the month before and you can't source it because it was cash, then the underwriter is just going to pretend like you only have $20,000 in your bank account. And if your cash to close was say $22,000, you would be short $2,000 even though you technically have the $30,000 in the account. So cash is probably the ultimate no-no. Other big things are credit cards. You cannot cash advance or take money from a unsecured line of credit and put it into your account and use that. So if you have what I call home equity line of credit, meaning you're taking money from another piece of real estate, that actually is allowable. But credit card advances, money that's unsecured in any way, shape, or form cannot be used. Now, gifts are allowable funds for most situations, like for instance, you can't use them for investment properties. But there are other things with gifts. I'm not going to go that into this video, but just keep in mind, depending on how you deposit those gift funds in your account, you are most likely going to bring that person who gave you the gift into the transaction where they may have to show bank statements. And sometimes, the person giving you the gift can be frustrated where maybe they don't want to give their bank statements and now the underwriter is requiring it. So that is where talking to a mortgage person up front can make a big difference, and make sure, like, there are ways that you can use gift funds where they don't have to source the money out of that donor's account or the person giving the gift through actual bank statements. So that's just knowing how to set it up front. Now, if anything you do prior to 60 days is fine. So let's say you had $20,000 in cash and you deposited into your account, 90 days ago. When we get 2 months bank statements or 60 days transactions, then that's not going to show up. So at that point, it's considered seasoned, right? Meaning the banks look at a 60-day period. And in some cases, we can get by 30 days depending on the loan type. So that's also a big one. Just know gift funds are not allowed in every situation, and the gift donor in some cases has to show the ability to give the gift. So if you give them cash and they give you a gift, that can also be problematic. So those are the big things that I see in bank statements. There are guidelines both on conventional, FHA, USDA, that they all have, where depending on how big the deposit is, maybe they won't have to source it. And remember, often they're also sourcing enough money for reserves. So often if you're buying a property, the lender may be requiring, say, 2 months reserve, meaning if the payment is $2,000 and there's 3 months reserves required, you would need to show $6,000 plus the cash to close for that transaction. So again, bank statements is just, I've been reviewing them for a long time. It can get frustrating. We're really good at walking you through that process. It's really good. That's why you want to get pre-approved up front, because those are the things you can iron out during your pre-approval. There's a million things with income, assets, looking at the whole picture, that just getting all those ducks in a row up front is going to make your life a lot easier. So also it is good to say too, with retirement accounts, 401ks, those are also all allowed. And there's ways to borrow against your retirement account where you're actually borrowing your own money and paying yourself back interest. So if you have any questions on this, how we source cash to close, or just getting pre-approved in general, as I always say, do your research, Google who you're thinking of working with. We have no lender fees. I can lend anywhere in Florida. If you have any questions on getting pre-approved, cash to close, anything on the mortgage process, please reach out to me. I'd love to help. Make it a great day. I'll talk to you soon. Bye-bye.